Hello guys, welcome to another episode of the Mastering Orderflow series. In this one, we're actually going to be covering the draw on liquidity. People have different ways of identifying their own draw on liquidity, but today we're going to talk about the actual objective way of doing it. Basically just filtering out which draws are actually important, because I see a lot of people out there just marking out hourly highs and lows and then just assuming that's their draw, but we have a logic behind it, and that's what I'm going to share. So hopefully by the end of this, you'll be able to actually choose your draws more objectively, and every day just going into the market, being more confident in what price is reaching for. So on the chart right now, you can see I've marked out a couple different lows. These are monthly lows. And the highs and lows of the month are, as we know, time cycle lows and highs. The term time cycles does not just apply to a specific minute window. We can also apply it to yearly cycles, monthly, weekly, daily. So looking at this, in this example, we've taken out the January low, and I want to show you what price then does once we reach a key liquidity pool. Now we're actually in the present day. What you can see is that we take out the lows, strongly close below them, and then we get a retracement back above the lows, and we get displacement move back down again. Now, what I want you to notice is this low right here. This low so far is the March low. If I go ahead and mark it out like this is basically how price moves, right? We form a new low, move higher, take out buy side, come back down, take out sell side, retrace, take out sell side again, retracement, expansion. You see how this repeats all over? Expansion, retracement, and price basically is engineering these lows, right, to be taken out at a later time. So when you see this, that we form a new low right here, and price then starts rallying up. We don't think about this as super bullish, right? Because we know that price is likely going to be engineering liquidity at these key times. And so this, until we actually displace even further, let's say above this January low, then all of this is just a retracement. We don't actually consider this a bullish move. And you can see what happened after price just continued to drop again, right? So as it is right now, this is the next draw. But you can see how the market is always engineering these highs and lows at very specific times and very specific places. Basically, this is how I trade as well, because you can fractalize this. So all these expansions, retracements, expansions, you can do it on the lower time frames, and it's going to look the exact same. If you are familiar with market maker models as well, you can see that we have left side of the curve, smart money reversal, right side of the curve. So if we follow this theory, right, what are our next draws after this current March low? Well, look down here. We have the September low. You can see this formed at 6th of September. So this would be another draw. And then finally, to complete it, would be the August low down here. Price doesn't necessarily need to trade all the way down here, but you can see from just the logic of market maker models that we are using this curve, right? We're filling it out for efficient price delivery. So now we're on the hourly chart here, and I just wanted to show you how you can actually fractalize this and use it in your trading as well. So the way to think about it is really simple. If we're using monthly highs and lows on the daily chart, well, on the hourly chart, we can simply use daily highs and lows, right? So as you can see, price is in a sell program here, and I've gone ahead and marked out this previous daily low and this previous weekly low. So every time you go into a new day and a new session, basically I want you to mark out where's the previous daily high, where's the previous daily low, and also mark out previous weekly lows and previous weekly highs, in addition to what we already did on the daily chart. Let's take a look at this example, right? Price opens, takes out the previous daily low. This to me was a pretty obvious retracement move here once we reached this busy right here. So once I see this, you have to think, okay, what is the next draw? What is price drawn towards? Well, we're not using previous days highs and lows for this. Instead, we're going to be looking at right here, which is the Asia high. So you see how we can use not only days, but we can also use sessions. So we use this, which is the Asia high, and then we also have London high. Basically, we're using sessions as well for more of an intraday trading. So once we see our first target get reached, then we can target the opposing liquidity pool. So in this case, by playing it forward, you can see price goes straight through it. Now by this point, since we are still bearish, this candle does not mean we switch bullish. And this is something I talked about in my choosing the right high time frame PD raise episode. If you haven't watched that, I highly recommend you do. But we're still bearish here. So if we're then looking for entries around 10, what would we then target? Because our previous daily low has already been reached. Well, in this case, simply move it down here. This is now the current AM low. So you see how we're moving. We're always looking for specific sessions or days, highs and lows. And we're going to target those because we know that price is drawn there. So in this case, we have our AM low. And if you're looking for a position here, you could know that, okay, like I talked about on the daily chart, we have expansion, retracement, expansion. So you look for those bearish signs, and what does price do? Session low reached. Of course, it was reached a little bit later than what you would normally trade. So going into the next day here, you can see that already inside of the London session, we have taken out the previous daily low. Now, if you're looking for shorts, you might be thinking, okay, well, that was my draw, then, my draw's been reached, I shouldn't really be interested. In this case, since we are bearish, and I want you to look at something here as well, the exact same thing pointed out on the daily chart, your eye should be drawn towards this low right here. It's all fractal, guys. It's really not that complicated once you start actually seeing it happen over and over again. Here we can see previous daily low was taken out. So you can see here, price expands through the previous daily low, retraces. This would now be the London low. So let's see what happens to that. We move our draw here, and just like that, gets taken out around open. I actually took this trade as well, but there was also another beautiful opportunity a little bit later here. As we know, this is Friday. So what do we expect Friday to do? Well, we expect Friday to deliver to the final weekly objective, which in this case, like I pointed out, is this low. Price then continued straight down and took out the previous weekly low in one candle. Beautiful expansions and a lot of opportunities inside of this one candle right here on the lower time frames. And yeah, it's just really beautiful to see. Price completes the curve just as we're about to end the week as well. And I believe it also did go even further. So as you can see, we had a pretty big range on Friday, and we stopped right before that March low I was talking about. So hopefully from this video, you've learned a bit more on how to evolve your draw, and to not only use the higher time frame draws, such as the monthly, but also being able to incorporate sessions into it and framing your ideas on that too, basically. So I hope this video was helpful. Try to put in some gems here and there for those who've been listening carefully. Hopefully you've enjoyed this. Have a great rest of your day or night, and stay safe.